Hello, today we will guide you through how to add rental income in ProjectionLab. In this walkthrough, we'll start inside ProjectionLab, open a ready-made plan so you can practice safely, and then add a rental property with its income and management costs so it flows into your long-term projections. Follow along, and feel free to pause as you enter your own details. Begin by opening ProjectionLab in your browser. Once the app loads, you'll see options to create or explore a plan. To make this simple and risk-free, choose the sample plan. The sample plan is a sandbox with example data, which makes it perfect for trying features without affecting any real numbers. After it opens, take a moment to get your bearings. Next, head to the section labeled Real Assets. This is where you track tangible items like property, vehicles, and other physical holdings. Rental real estate lives here because it's a real, income-producing asset that influences both your net worth and your cash flow. Inside Real Assets, look for the plus sign to add something new. Clicking this gives you a menu of asset types. Choose rental property. This selection brings up a property-specific setup, so ProjectionLab knows to expect rent, expenses, and timelines related to real estate. Now open the rental income area. This is where you'll define how much income the property generates and how it's treated in your plan. When the yearly income field appears, enter the total rent you expect to collect over a full year. If you usually think in monthly terms, a quick way to convert is to multiply by 12. Consider your expected occupancy when you estimate this number. Using a slightly conservative figure can make your projections more resilient. Next, enter the property management costs. This represents what you pay a manager or management company to handle leases, tenant communications, and maintenance coordination. It's often set as a percentage of rent or a flat yearly amount. If you self-manage, adjust this field accordingly so it reflects your actual cost. Including this expense here ensures your net rental income is realistic and rolls into your plan correctly. When your entries look right, click Add. ProjectionLab will save the rental property with the income and management costs you specified and immediately incorporate them into your forecasts. You can revisit this asset later to refine assumptions as your situation changes, like updating rent, adjusting fees, or reflecting market conditions. That's it. You've successfully added rental income in ProjectionLab, turning a property into clear, trackable cash flow within your financial plan.